Hello traders, welcome back to another video. I welcome you all to chapter 4. In this chapter, I will be discussing about key confluences. These are concepts in our setup that will make our setup A plus probability setup. Alright, these are the concepts that will tell us if our setup are high probability setups or not. Alright? So for our first video, I will be discussing about SMT divergence. So what is an SMT divergence? First, let's go to what SMT means in SMT divergence. SMT means smart money technique. So what does it mean? Smart money technique, it means that this concept are what smart money uses. We can see exactly the footprints of the smart money, the market makers. We can know exactly when they are entering into the market and when they are manipulating the market, right? This is why they call this the smart money technique. You can know exactly when the market makers are entering the market. So, SMT divergence is a discrepancy between closely correlated or inversely correlated assets. I will explain it more in a few minutes. Right? So, this is a very, very strong confluence. With this concept, we can know exactly when the market is continuing or reversing. Alright? We can know exactly when the markets are entering the markets or manipulating the markets. There are two types of SMT divergence. So, take this down on your notes. The first one is the correlated pair or correlated assets. These are pair or assets that moves identically with each other. Right? These are pairs or assets that moves almost very the same with each other. And our second type of SMT divergence are inversely correlated pairs. Alright? These are the pairs or assets that moves also identically with each other, but the charts of them are inversely with each other. I will explain it to you in the next coming slides. Alright, so first, the correlated pair or asset. This correlated pair or asset should move synchronously with each other, meaning they should move almost identical with each other. If this pair is taking out this swing low, the other pair should also take out that swing low. Alright, here are some of the correlated pairs and assets. We have EURUSD and GBUSD, meaning this pair right here, the EURUSD and the GBUSD, moves almost identical with one another. If EURUSD is going down, GBP/USD is also going down. If EURUSD is taking out this swing low, GBP/USD should also be taking out this swing low. That is the same case with all of these pairs. Alright? These are not all the correlated pairs in the financial markets. These are just some of the correlated pairs. If you want to see the full list, you can search it up on the internet. Alright, so this is what correlated pairs meaning. Let's assume this is Euro USD and this is GBP USD. As we can see, we have swing low right here, and we also took out this sell side liquidity right here, just like in here. All right, as we can see right here, we have shifted up higher, just like in this pair, right? If you look at it, they are very identical with one another. It looks like they are the copy of one another. That is what correlated pair meaning. They move almost identical with one another. If this pair took out this swing low, this pair should also took out that swing low. If the pair shifted higher, this pair also should shift higher. Alright? So, when are we going to find an SMT divergence? And there we have it. This is the SMT divergence. As we can see right here, price took out this swing low right here, which means this pair also should take out this swing low, right? This is where we have an SMT divergence. I already mentioned this in the mitigation block video, but this is the full explanation of how SMT divergence works. Alright? We have here swing low. We have also swing low right here. We took out this swing low right here, but we failed to take out the same swing low right here, which shows us a crack in correlation right here. This correlated pair should be moving almost identical with one another. But when we have an SMT divergence just like this, that is exactly when we know the market makers are entering the market. This right here is a manipulation. Why is that? Because as we can see right here, the other pair failed to take out this swing low right here, which means the price is no longer willing to go lower. You understand? This right here is only a liquidity grab, which exactly what shows in this pair. This pair shows that it's no longer willing to go down. It wants to go higher now. This crack in correlation shows us exactly that this is manipulation, right? This pair right here should be moving identical. Alright, when you see a setup like this, when you have an SMT divergence, this is a high probability setup. Just like I said, you can enter on the setup that formed a breaker block. You can enter in this pair. Alright? So, this is a live market example. As we can see right here, we are bearish. This is Euro USD and this is GBP USD. As we can see right here on Euro USD, the price took out this sell side liquidity right here, which this pair should also do. But as we can see, price failed to take out this sell side liquidity, showing us a crack in correlation. As we can see right here, we have lower low, but here we failed to produce a lower low. Now we have an SMT divergence. This is a high probability confluence that the price will now reverse higher. Right? Like I said, we can enter in this setup right here that form the breaker block. It is much higher probability because in this setup, the price can still take out these equal lows before going higher. Right? So remember, correlated pairs are pairs or assets that are moving in almost identical movement. Next one is the inversely correlated pairs. This is just the same with correlated pairs, but in this case, the markets are inverse with each other. As we can see, both pairs or assets should be moving synchronously but inversely. Right? So here are only some of the pairs that are inversely correlated with one another. All the forex pairs to US dollar, that means Euro USD, GBP USD to US dollar. Alright? That means if the US dollar is going up, the forex pair should be going down. That is inversely correlated pairs. Alright, so here is an example, right? Just like in the correlated pairs, the price should be moving identical with one another, but in this case, the markets are inverse with one another. In here, this is just the upside down version of this pair right here, right? So as we can see right here, price took out this buy side liquidity. Same with here also. We have here higher low and higher high. Also with here, we have here lower high and then lower low. Just look at the liquidity grab. If you see carefully, both pairs in this market took out this buy side liquidity. In this case, sell side liquidity. Right? This is how inversely correlated pairs should be moving with each other, right? They should be moving like this, identical with one another. So here is how SMT divergence occurs in inversely correlated markets, right? So as we can see, price took out this buy side liquidity right here, but in this other pair, it failed to take out this sell side liquidity, which means we have a crack in correlation. This is a high probability confluence that tells us the price will either continue higher or now reverse. Alright? This is a very strong confluence for our setup. Alright? If you can't understand this concept yet, that's completely fine. It's normal. Especially in this inversely correlated pair because the market in the other pair is upside down. Right? You can take your time and watch this video a few times. This is a live market example. Right? So as we can see right here, this pair right here took out this equal lows. It took out this sell side liquidity. But on the other hand, in this asset, it failed. It completely failed to take out that equal lows and continued higher. Which means this move right here is only a manipulation. Because in here, it shows us exactly that the price is no longer willing to continue higher, meaning this is only a liquidity grab, right? This is a crack in correlation. That the price is most likely is to reverse now. So that's it for this video. I hope you are writing down notes. This concept, this confluence is very, very important, especially if you're trading price action. This is vital in our setup. This will tell us exactly if our setup is a high probability setup or not. Alright? So if you are having a hard time understanding this concept, you can watch this video a few times. I will see you on the next video. Wishing you good reads and good luck.